It feels safe. You log into My Tax. The numbers are already filled in, and you assume the ATO has done the hard work for you. But pre-fill can be incomplete or plain wrong. And if you lodge without checking, you can end up underreporting income the ATO can already see. This is how to check it properly before you hit lodge. Here is why this matters so much. According to PABS Accounting, citing ATO data matching programs, the ATO matches more than 600 million third-party transactions every year from banks, employers, government agencies, and financial institutions. Much of that same data flows into your pre-fill, so any gap between what you lodge and what they hold gets flagged automatically. Picture missing just $900 of bank interest that only hits pre-fill in late July. At a marginal rate of 34.5%, that is about $310 of extra tax owed based on ATO tax tables. If the ATO decides you failed to take reasonable care, the standard penalty is 25% of the shortfall under ATO penalty guidance, adding roughly $78 plus interest. One small missed line can cost around $100, and this is not a one-off. Modelling a 40-something on a $110,000 salary with recurring small discrepancies of around $700 a year shows extra tax, penalties and interest of roughly $386 annually. Over a 26-year working life that compounds to about $10,000 purely from never reconciling pre-fill against your own statements. Move 1 is about timing. The ATO confirms pre-fill data is available from the 1st of July, but most of it is only finalised by the end of July, and items like trust distributions and contractor TPR data arrive even later. So log into MyGov, open My Tax, and check the ATO pre-fill availability page. If your key categories are not yet marked available, wait until late July or early August before you go any further. The classic mistake is treating the 1st of July as the green light to lodge. The ATO explicitly warns pre-fill may be incomplete because an organisation has not supplied data yet or processing is not done. Some interest, dividends, managed fund distributions and government payments simply are not there in early July. Waiting until most data is finalised lines your return up with the records the ATO is matching against. Move 2 is a line-by-line audit. The ATO warns people not to rely solely on pre-filled information because it can fail on timing, matching or validation. So in My Tax, work through each item one at a time. Check your salary against your employer income statement, bank interest against your annual interest summary, and dividends and managed fund distributions against your share, registry and fund tax statements. Every figure should agree to the dollar. When you spot a wrong figure, do not just shrug. The ATO instructs you to contact the organisation, whether that is your bank, fund or employer, so they send corrected data through, then amend the amount in My Tax. If you override a pre-filled number, the ATO may ask you to select a short reason code, which tells you they are actively watching overrides and discrepancies. Move 3 is adding what is simply absent. Write down every income source for the year, including wages, interest, dividends, managed funds, rental income, contractor work, and crypto. Then in My Tax, add anything not pre-filled, such as late trust distributions or small TPAR reported contractor payments. The goal is that no income in your records is missing from your return, which minimises mismatch risk when the ATO runs its 600 million transaction data matching programs. Here is what that looks like in practice. Sarah, 39, and on a $110,000 salary, opened her return and saw pre-filled interest of $1,100, but her statements showed $1,800. By adding the missing $700 herself, she avoided roughly $270 of extra tax at her 39% rate, plus a potential $68 penalty and interest, saving around $360 on one item. The most expensive mistake is believing that if the ATO pre-filled it, it must be 100% right. The ATO explicitly states do not rely solely on pre-filled information because it may be incomplete due to timing, matching or validation issues. For individuals, they say all you have to do is review the pre-fill and add any missing details. Reviewing is the job, not blind acceptance. Two areas people consistently get wrong are private health insurance and managed funds. Sarah's fund corrected its report after an admin error, and accepting the wrong days covered would have cut her health insurance offset by around $150. Her $1,200 of managed fund distributions had not even reached pre-fill yet, and adding them correctly saved her roughly $585 in tax and penalties. Let us recap fast. Know what a missed line costs you in tax, penalty and interest. Wait until late July when most data is finalised. Do not lodge against half the picture. Audit every pre-filled amount against your own documents. Fix any errors at the source and amend in MyTax. And manually add the income pre-fill misses, especially late and side income. 30 minutes of checking can save you hundreds this year and thousands over a career. So do not let pre-fill lodge your return for you. If this helped, subscribe to The Fine Print for more plain English Australian tax guides. Next up, we break down exactly which deductions the ATO data matches hardest in 2026. Watch that one before you claim a single dollar.